Welcome to everyone just coming in and joining the webinar now. I'll just give it a minute for everyone to come in and then we'll get started. While we're waiting for everyone to come into the webinar, feel free to say hello in chat. I've got Hayley from our customer success team here with me as well. Let us know where you're joining in from. We'd love to hear from you. We've got Kim and Mike. Thanks so much for joining, guys. I'll just give it 30 more seconds and then we'll get into the content for today. Alrighty. Just give me one moment. All right. Okay, welcome everyone to our webinar all about how to get your super sorted. Before we begin, I've just got to run through our disclaimer, so bear with me. Superhero does not provide financial advice. It considers your personal objectives, financial situation, or particular needs, and all investments do carry risks. So please consider the product disclosure statement and target market determination that are available on our website at superhero.com.au before making a decision to acquire, hold, or continue to hold an interest in Superhero Super. Past performance is not indicative of future performance, and any graphics, charts, or graphs provided are for illustrative purposes only. So all of that information is also available on our website for you. So today we're going to go through some of the basics of superannuation in Australia. That includes kind of some updates to the contributions and first home super saver schemes. We'll then go into what is Superhero Super. So Superhero have a super product. We'll go through a bit more about what's available in that product, including some of the investment options, and then we'll have time for some live Q&A at the end. Now, throughout the webinar, please feel free to use the Q&A function. You'll see it at the bottom of your screen for any specific questions that you'd like answered at the end. If you do have any general chat, please feel free to use the chat function, but for specific questions, use the Q&A function. And I've got my colleague Hayley here from our customer success team here to help answer any questions or direct you to the right place as well. So she'll be on chat throughout the webinar as well. So what is superannuation? I'm sure most of us, particularly if you're an employee, are very familiar with that superannuation payment that comes with your paycheck every month or every week, whenever you get paid. But superannuation or super is money put aside by your employer over your working life for you to live on when you retire. So it's putting aside some money so that when you retire, you've got some funds there to allow you to live. And as of July 2022, the minimum superannuation requirement for employees is 10.5% of your ordinary income. So that was previously 10%, it's now gone up to 10.5%. We all know the cost of living isn't going down, so nice to see there that we're all getting a little bit more super. And employer contributions to super are taxed at a rate of 15%, which if you compare to kind of some of the income tax brackets is a little bit lower than some of those income tax brackets, depending on your income. But yeah, taxed on the employer at a rate of 15%, those employer contributions. And contributing to your super. So in addition to your employer contributions that you might receive as part of your paycheck, or additional to your paycheck, there are two other types of voluntary contributions that you can make to your super. The first type is a concessional contribution. So these are made from your before taxed income and are taxed at that 15% tax rate. So examples of this do include the compulsory employer superannuation contributions, any salary sacrifice arrangements you might make with your employer, which is essentially an agreement with your employer that you'd like more of your income to go towards your super, and any personal super contributions that you then claim in the future as a tax deduction to get that overall 15%. So each of us is entitled to a concessional contribution cap of $27,500. So in any singular tax year, you're able to make an additional $27,500 of contributions to your super fund. And those will receive that tax treatment of those contributions, if that makes sense. So concessional contributions taxed at 15% in the super fund. Now, non-concessional contributions, the main difference here is that these are from your after-tax income and they're not taxed in your super fund. So if you think about it, additional to that $27,500, you've got that concessional. If you then make any additional contributions, these are from your after-tax income, so you've already paid tax on that, but you can add another $110,000 per year of non-concessional contributions if you choose to. So examples of this might be voluntary additional payments you make from your take-home pay, or any made on behalf of your spouse, or a government co-contribution. So again, all of this information is available on the ATO website and on government websites. So feel free to go onto the ATO and have a bit more of a look into each of these types of contributions. But the main difference there is the tax treatment. So again, chat to your accountant. We don't give any tax advice here at Superhero, but chat to your accountant or tax advisor more about the implications for you. Now, for those of you who may not have heard of the First Home Super Saver scheme, this is essentially a government scheme that allows you to save for a deposit using your superannuation. So you can apply to have up to $15,000 of voluntary super contributions released from any one financial year. And the scheme is capped at $50,000 across all years. So essentially, you can make some voluntary additional concessional contributions, for example, every year into your super. And then when you want to buy a home, you can actually access those voluntary contributions up to $50,000 across all years to put towards your first house deposit. And this has actually recently gone up from $30,000 in total to $50,000. But just keep in mind that the maximum you can pull out from any 1 year is $15,000. So you will need to have built up those voluntary contributions over a few years. So if you think 50,000, you'll need at least kind of 3 or 4 or more years to build up to that 50,000 in total that you're then able to release when it comes time to purchase your first home. And in terms of eligibility, to be eligible for the scheme, you'll need to be a first home buyer, so never have bought a home before, and you need to live in the home that you're buying or intend to as soon as is practical if you haven't moved in yet. And you need to intend to live in that home for at least 6 months within the first 12 months that you own it. So just keep in mind there some of the eligibility requirements. All right, now into some types of super funds. So here are 4 of the main types of super funds you might see out there. The first is an industry fund. So these funds are the biggest portion of super funds in Australia. And these ones cater to workers in single industries across multiple work sites. So you might think construction or retail, but most of these industry funds are now open for anyone to join. Some of them might still be named according to a certain industry, like retail or hospitality, but most of these funds are now open for everyone to join. So, some of the biggest industry funds in Australia, for example, would be Australian Super or Aware Super. So some of the big ones you've probably heard of. The second type of super fund is a retail fund. So these funds are run by banks and other financial institutions and are open to all investors. So an example here would be Mercer or AMP. And these funds are run by the banks and financial institutions. Superhero Super, which we'll go into a little bit more in a little bit, is also a retail fund. So we're a financial institution, so we offer a retail super fund product, not as opposed to an industry fund. Again, there's lots of different investment options in both of these types of funds and different performance and fees as well, and they all differ on each individual fund. So just make sure that you're doing your own research when it comes to picking a fund that's best for you. The two other types of super funds are public sector funds, which were originally created for government employees. Some of these are now open to everyone. Some are still specifically for government employees. And then the fourth type is a self-managed super fund. So this is for investors that want more control or flexibility over their own super fund. Now, these setup costs and annual running expenses can be quite high. So this is often for people that have a larger amount in their super that then allows them to cover for those expenses, because it can be quite a bit more expensive to set up and run a self-managed super fund as opposed to being in an industry or a retail fund. And just to give you an idea of the size of different types of funds in Australia, here's a good graph from Finder that just shows that the industry funds are the biggest, followed by self-managed super funds, retail, and public sector. Now, this is the total amount of money in this type of fund. So within this, for example, industry funds, there's less of them, but they've got a lot of people in each fund, as opposed to a self-managed super fund where everyone's running their own self-managed super fund. And what do super funds invest in? Now, again, this differs very much by the individual fund and also the individual investment option that you choose. But overall, here's some averages just to show you that 27% of super fund assets are actually invested in international listed equities or listed shares and ETFs or listed stocks. So when you think of the superhero investment product, for example, and you can buy US shares, that's kind of an example of international equities. Now, the US is not the only international market, but 27% of our Australian super fund assets are actually listed in internationally listed equities. That's then followed by Australian listed equities. So think about the ASX and all of the investment options available there. That makes up 24% of all of the assets in super funds in Australia. We've then got fixed income. So this, for example, would be government bonds. There's about 18% of assets invested in fixed income. Again, these percentages will also differ depending on the type of risk you want to take in your super. So a lot of super funds may provide different options depending on your risk level or your life cycle or age. So often super funds will give you a slightly riskier profile when you're younger. So investing more in those equities that have a longer time horizon. And as you start to get older, some of the more balanced options will invest more in fixed income and cash, for example, for that preservation of assets, as opposed to kind of that growth or trying to get that growth over the long term. Some other ones there are property. So everything from office buildings, commercial towers, super funds are a large investor in property, and infrastructure as well. So road projects, transportation, super funds, you can really see have all of the investments in all of the different functions of our society, really. And then unlisted equity. So that is investments in companies that are still private. So they're not listed on a public stock exchange. So you won't see them, for example, available to buy and sell through an investment app like Superhero. And a quick look at some of the returns over the past 5 years. Again, very much differs between individual super funds, but this is the market as a whole. And you can see that just some things to call out there. March 2020 was obviously the crash that happened during COVID. And as this is only reported in March, or this stat is reported in March, you'll see that it looks quite down in March, but then it had quite a recovery the next year. Now in 2022, and we'll have a look at the market in a second, we have seen a slight decline in the markets. So on a year-over-year basis, obviously we had a bit of a stronger end to 2021, but then it hasn't been so good in the last couple of months. And you can see there that kind of evens out as a yearly return over the past 5 years. But kind of sitting most of the time between around 6 to 9% per year. And just to look at the markets to show you a bit about what might be going on, and depending on how often you check your super, you may see different numbers reported. But the market this is the S&P 500, which is the biggest 500 companies that are listed in the United States on the stock exchange. And you can see here that in the past year, we've had the market go down by 6%. And again, a lot of super funds are investing in these internationally listed equities. So this is just an example of one market. But 1 year performance has been -6%. But then over the past 5 years, it's had a gain of 66.29%. So you can see that the market is definitely a long-term thing. There are fluctuations always in the markets, but it's important to look at not just the short-term returns of a fund, but also the long-term returns of the fund as well, and the particular investment option that you might be interested in. Alrighty, so we've looked a little bit at the supermarket as a whole. Now let's have a bit of a look at Superhero Super. So the specific super fund that Superhero offers, in addition to our kind of normal trading investment app. What is Superhero Super? So Superhero Super is a retail super fund, as I mentioned, but it operates a little bit differently to how a normal super fund that you might see, like an Australian super, for example, might work. And that is because with Superhero Super, you can add a super account within your Superhero app, and you'll be able to manage your investments and your super side by side. So simply toggling at the top of your investment app, and you'll be able to see both your investing and your super in one place. Now, we offer 2 different account types. Those are called autopilot and control, and we'll go through the specifics of each of those account types in a moment. Now, the great thing about Superhero Super is you don't need a self-managed super fund. So you don't need to have the admin or costs required to set up a self-managed super fund. It is a retail fund. And so it has things like life insurance and total permanent disability insurance that are included or can be included. You need to opt in or opt out of those during sign up, but those can be options that can be kind of included in your setup of the super fund. And you can see exactly where your super is invested. So we provide complete transparency about exactly where your super is invested in any one time. Now, the 2 different account types we offer are differentiated based on the amount of control you have over individual investments. So the first type, autopilot, allows you to invest up to 30% of your super into different themes or ETFs. So these themes have ETFs behind them, and all of your contributions will be automatically allocated out to your investment choices. So 70% of your super will be in our global diversified index option, and then you'll be able to allocate up to 30% of your super across themes like technology, health, sustainability, or climate change. And these have ETFs behind them. So during the setup, you'll be able to see those themes and be able to see which ETFs you'll actually be investing in. And the cost for that you can see there as well. Again, all of our documents for super are available on the support page of our website under disclosures. And it's a really good place to go because we've got the PDS, which is really, really important. It provides you all of this information in detail, including things like fee examples too, depending on your balance. And it also provides you with all of the investment guides and insurance guides as well. So make sure you check out our website, either the super page on our website or the support page as well for more information on this. The other type of super account that we have is the control account. So this is where you can invest up to 75% of your super into direct shares and ETFs. And what we have available is ASX 300 shares and a bunch of ETFs. So ASX 300 is the top 300 shares listed on the Australian Stock Exchange by market cap, or the largest valuation, if you like. So think about the likes of Commonwealth Bank, Westpac, Woolworths, Xero. There's a whole lot there, 300 there. And we've also got quite a large list of ETFs available for you. So you'll invest 25% in our global diversified index option as opposed to 70% in the autopilot account. And then with the rest, that 75%, you'll be able to invest that in those shares and ETFs that are available. And again, on the support page of our website, we've got a full list of exactly what shares and ETFs are available to invest in with the control account. It's called the approved approved product list, I'm pretty sure. So feel free to jump on the website and have a look, or contact our team on live chat as well on our website, and they'll be able to help you or direct you exactly to where that is. Again, no self-managed super fund required for this, and it does provide you with a lot more control over exactly what you're invested in. And with this one, it's a little bit different with contributions. So if you set up employer contributions into your superhero super account, the autopilot option will invest those automatically in your percentage balances, if you like, whereas the control account, when you receive a contribution, 25% will go to the global diversified index option, but the 75% will sit in your wallet. So similar to in your trading account, when you make a deposit, your contribution will sit in your wallet and you'll be able to invest that whenever you like. You can keep it as cash for a while, and then you can invest it as you would invest exactly the same as the superhero trading platform. So you've got market and limit orders available, and you can place an order either when the market is open or when the market's closed, and it will execute for you the next market day. So a very, very similar process to our trading platform. If you're familiar with the trading platform, the control account looks quite similar. Both accounts look similar, but the control account in terms of trading in and out of certain positions very much works in a similar way to our trading platform. And you've got live market data as well. So you can, again, go to the invest tab, look at different types of shares and ETFs that you might want to invest in, and invest as you would with the trading platform. Alrighty, so a bit of a closer look at the investment options available in Autopilot. You can see here, as I said, there's 6 themes or ETFs. So we've got US Tech, which is the Beta Shares NASDAQ 100 ETF, Asia Tech Giants, we've got Global Healthcare, Climate Leaders, Gold, and High Interest Cash. So you can see on the right there, this is an example of what your setup will look like if you choose Autopilot. And you can see where you can toggle how much you'd like in the global diversified index option. And then you can add those ETFs further down as well. It's a maximum of 10% of your super in each ETF, up to 30%. So you could do 10% in 3 different ETFs, or you could do 5% in all 6, just depends on whatever you'd like to set up your super fund as. And we've already spoken about the control account, but again, just to reiterate, you can have a minimum of, it's a minimum of 25% in the global diversified index option, and then the rest will sit in your wallet, and you'll be able to invest in ASX 300 shares and a list of ETFs as well. Now, something that's come up quite a bit in questions to us about Superhero Super is, I'm interested in investing my super ethically. What are my options? Now, this is not exhaustive by any means, but I just wanted to highlight a couple of options that you may want to look at. The most important thing here is actually being very specific in terms of what ethical investing means for you. Now, the term ethical is very, very broad, and there are lots of different investment options that define this differently. So for some ethical investments, this may mean taking out or negative screening for things like alcohol or gambling, or fossil fuels, for example. Whereas for other investments, they might be actively looking to invest in a specific sector that is focused towards a very particular value or goal. So for example, companies that make up that are all towards renewable energy, or their core business is renewable energy, as opposed to a more general sustainable or ethical ETF that may only negatively screen for certain industries, but doesn't specifically invest in a particular industry or sector focused towards climate change, for example. So again, different types of investments depending on what you define as an ethical investment or your own goals. But an example of this in the Autopilot option is the Climate Leaders theme. So this one is the Beta Shares Global Sustainability Leaders ETF. And this has a portfolio of large global stocks identified as climate leaders that have also passed screens to exclude companies with direct or significant exposure to fossil fuels or engaged in activities deemed inconsistent with responsible investment considerations. And if you would like further information on exactly what this ETF holds, you can jump onto the ETF provider's website, or actually you can look up the top holdings in your superhero account as well. But yeah, the ETF provider's website really provides a full breakdown of exactly what the investments in this ETF are. When it comes to the control account, again, there's a range of different ethical ETFs available, but please go to the provider's website. So whether that's Vanguard, BetaShares, VanEck, search these ETFs up. There's more than this list. This list is not exhaustive, but actually have a look. And there's some great resources online, like Market Index as well, where you can compare some of these and look at exactly what they invest in as well. Or you can invest, for example, in a particular sector or certain companies that are involved with renewables or clean energy, or that are certified as B Corp, for example. Really just depends on exactly what you're looking for. And how to join Superhero Super. So in order to have Superhero Super, you need to first have a superhero account, which I think most of you do. But to join Superhero Super, sometimes you may see it as a little tab that comes down and you might be able to just add it. Otherwise, you'll always be able to add an account from your profile. So if you go to your profile, you'll see an add an account button, and there is where you can sign up for Superhero Super. So you hit add an account, and then you'll start to see this flow here. So the first step is that you choose your investment. So you choose either autopilot or control, and you'll be able to choose your different kind of percentages of your balance and where you want that to go. You'll also be able to pop in your tax file number, and this will pull for you where your existing super is. And if you'd like to roll over your super from another fund, you might see that you have super in 2 funds, for example. This tool will actually show you exactly where your super is. And where your balance is, and you'll be able to either do a full rollover if you'd like to, or a partial rollover. If you've got 2 funds, you may want to consolidate those, or you may just want to roll over super from 1 fund, but you can do all of that with that tax file number tool. You'll then flow through and you can select your insurance option. So there's a little questionnaire there that will determine the right level of insurance for you, depending on your age and your occupation, or you can opt out of insurance. And then you will go into your super account. So again, your rollover may take a little while to come through from your existing fund, but we'll notify you when that's done and when you receive that rollover, and you can then invest your super. For employer contributions, we'll then send you a link to a form that's automatically filled out for you that you can send to your employer, and that will let them know that you're with a new super fund if you'd like your contributions, your future contributions, to come from your employer into your Superhero Super account. So yeah, there's the process of kind of setting up your account. All of this information is also available on our website, on the super page of our website. So please feel free to jump in there and have a bit more of a look. And again, look at the PDS as well. That gives a really good overview of exactly what the product offers. And I think that's it for content. So I'll stop sharing my screen now, and then we'll get into a few questions. Okay. Are there any costs for buying and selling shares in the super account? Great question, Darren. So yes, there is the $5 brokerage fee for buying and selling shares and ETFs in super. So similar to the trading account, we don't have the $0 brokerage to buy ETFs offer in super. So it's just $5 brokerage whenever you buy or sell anything. I've got some questions here on exactly which ETFs are available in super. Please feel free to contact us on live chat or go to the support page of our website. You'll be able to find in our disclosures section a full list of all of the approved investments in super, and exactly what percentage of your balance you're able to invest in each one as well. All right. Where do we find info on the insurance pricing? Again, we've got a full insurance guide available on the website, or you can contact live chat and they'll be able to help you with all of the insurance costs as well. And in terms of fees more generally, because the fees are very determined by what your balance is, I can't tell you exactly what your fees are going to be. But for example, if you go onto a comparison website, for example, you'll be able to see often they use $50,000 as an example kind of balance for a fund. So you can go on and see what another fund might be. And then on our PDS for super, which you'll find on our super page, we've got some fee examples there as well. So you can really compare what it might be for a similar balance size. So this is a question from Kim. If I roll over my existing super into superhero, do I need to continue to make contributions? So no, Kim, if you just want to roll over your super, you don't have to then add any additional contributions. You could just have your rollover sitting there and use that money to invest. If, for example, you're no longer working for an employer, you don't have to make additional contributions. But obviously, if you have contributions and you don't want those to go to your old super fund and you want everything to go to Superhero Super, you will need to send that form to your employer just to let them know where to send your super, but not a requirement by any means. And again, the insurance fees, they do differ depending on your age. And on your occupation as well. So when you go through the setup process, it will actually tell you what your premium will be based on the insurance or what insurance cover you'll have essentially based on that questionnaire that you go through. But our insurance guide has all of that different information as well. How does Superhero Super allow for differing risk profiles? So that was a question from Scott. Now, when it comes to risk, there's a couple of things that we do. The Global Diversified Index option, which is either 25% or 70% of your super, is a balanced fund. And that actually it's the Vanguard Diversified Fund, VDBA, that sits behind that investment option. So you can go and have a look at exactly what that fund invests in, but it is a balanced fund. And then obviously you can select different ETFs or shares that align with your risk profile, whether you're selecting themes in autopilot. For example, cash is a lower risk asset than, for example, US tech. So it just depends on your own risk profile there. Whereas control, now, number one, we've only got the top 300 shares available. So we don't have some of those really, really small cap stocks on the super fund side of things. So it's ASX 300 and ETFs. So you'll just, essentially the investment product is a little bit more limited. And also we do have some controls around how much you can invest in one share or ETF. So some of the bigger shares in ETFs, you may be able to invest a higher percentage, whereas some of the smaller ones, it will be a lower percentage depending on that risk profile. But again, that's all available on our website. You can see how much of each type of share and ETF you can invest in, or what percentage. So a question around Superhero Super not being a self-managed super fund. So does that mean you don't have any of the compliance costs and work? Yeah, so when it comes to Superhero Super, it operates very much in a similar way to an industry or a normal retail fund. When you see your tax return, and again, please talk to someone about your own tax advice, but it will appear as a normal super fund, and you'll be able to see your contributions and your balance in your MyGov. It's different. A self-managed super fund will require you to do all of that kind of super fund admin and everything yourself. So no, you don't have to do any of that self-managed super fund admin or have any of the costs associated with that setup or admin either. Very much operates as do industry and retail funds. Can we have multiple retail super accounts? You can have technically as many super funds as you want, but really you need to keep in mind that there are fees associated with each super fund. And if you've got a balance in those super funds or insurance in two super funds, you will be paying fees on that. So yeah, for example, you probably want to make sure that you don't have duplicate cover on insurance. Again, contact your tax advisor, but yeah, keep in mind that fees are on each super fund where you have a balance, and insurance also can be in both super funds. So just be aware of what you are being charged if you do have multiple accounts. All right, I think I've covered most of the questions. If we haven't covered your questions specifically today, please feel free to contact us on live chat, and we'll also have your questions and aim to get back to you on email. Hayley's been helping me as well. So thank you very, very much for joining us today. We really hope to see you in our next webinar. We've got some pretty exciting ones coming up, and I hope you enjoy the rest of your day. Thank you very much, everyone, for joining.